Welcome back to Squawk Box. Rick Santelli here live at CME HQ with a litany, a long list of important breaking news. Let's start out with our first look at fourth quarter GDP. Expected to be up 2%. Buckle up 3.3%. Up 3.3%. That is a huge jump. Obviously, it follows a stronger 4.9, but this is much stronger than many anticipated. And if we look at consumption, 2.8, 0.3 higher than expected, but also 0.3 less than the rearview mirror, which was 3.1 on the price index. Half of last time, 1.5. We're expecting 2.2. Our last look was 3.3. 1.5, how does that figure in? 1.5 would be the lowest since it was negative, and that was June of 2020. Now let's go from month over month to core, shall we? On core pricing index, quarter over quarter, expecting 2%. We had 2%, that's the number, and 2% in the rearview mirror. Let's quickly go to retail inventories. We're expecting unchanged. They popped up big time, up 0.8%, up 0.8. And of course, these are the types of things that boost GDP. If you look at wholesale inventories, the same scenario. Wholesale inventories breaks 2 months negative in a row, up 0.4, up 0.4. That's the biggest increase month over month on those inventories since November of last year. Now let's go to trade, shall we? On trade, what we are seeing is minus 88.5 billion, very close to expectations. Durable goods. If you recall, last time, 5.4, that was best since July of 2020, and that moves up to 5.5 on a revision, and the averaging takes hold, unchanged, less than expected, but when you put the 2 months together, you can see that it isn't a bad number. Ex-transportation, it jumps up to 0.6%, 3 times expectation, 1/10 higher than the rearview mirror, so we could see transportation orders boosted durable goods. And if we look at capital good orders, non-defense, ex-aircraft, a proxy for capital spending, it's up 0.3, much stronger than we were expecting. And in the rearview mirror, an upgrade from 0.8 to 1%. So to see 0.3, yes, it's a third of what we had last month, but it is still very, very solid. Shipments come in up 0.1%. And finally, initial jobless claims expected to be 200,000, pop up to 214,000. Maybe last week's 187, now revised to 189, was maybe affected by a bit of a shorter work week. 214,000, that is the biggest initial claims going back to the third week in December when it was 220,000. And finally, continuing claims, 1,833,000. That follows 1,806,000. It's a little bit higher than expectations. And if we look at interest rates, we've seen both sides trade. 10s went up to about 4.18 plus. They're back down to around 4.14. They were around 4.15, down a couple of basis points. That was where they were before the numbers. 2-year note yields are at 4.36, exactly where they were before all these numbers. That represents down 2 basis points on the session. And I will kick it back to the panel. I guess in summary, what I found most surprising was the extra strength in GDP.